Mm-mm-mm. Good afternoon. Welcome back to Strongman Personal Finance. In this lovely, amazing video, Christopher Bell, certified CPA, is going to look at the earnings for Google. And as a shareholder of Google through the Vanguard Total World Stock Market Index ETF, as a matter of fact, I believe it's roughly 2% of my portfolio. Pretty crazy, huh? I believe I should keep on top of the companies that I am invested in. So let's go ahead and check out Alphabet Inc.'s most recent earnings. Now, before we dive super deep into it, obviously we know it vertical lined. Okay, the stock's up 11% in 5 days. There were a ton of clowns on Twitter, on YouTube, that were losing their absolute minds about Google stock. They were freaking out because the stunk was going down. Oh my God. Is Google finished? Because they had some fumbles with AI, my hot guy demonstrations. And there were just some snafus out there, especially with that image generator that made Germans in World War II look like minorities, basically. So there were some snafus, and Google stock was selling off. You can kind of see the sell off here. It went from 154 and it went all the way down to 132. And everybody was, oh my God, oh my, is this the end of Google? And I sat there and I said, what are you talking about? And then on top of that, they said, buy the dip. That's another thing I heard was buy the dip. But if you zoom out 5 years, okay, this little dip up here, you see this little, it's really small. This is what they were freaking out about. Like the clownery on YouTube and Twitter is just out of control. Every time something dips, they tell you to buy the dip. But you could also buy the rip and still make money, if that makes sense, because it's been ripping 182% in the last 5 years. Anyway, okay, let's go look at Google's earnings. So here's Google McDougal. I was perusing it a little bit. Alphabet announces first quarter 2024 results. Sundar Pichai, CEO. Our results in the first quarter reflect strong performance from search, YouTube. Oh, wait, is that what I use? And cloud. Just on a side note, I don't do anything with like Google Cloud. I think it's garbage when it comes to like storage and stuff like that. I don't know who uses Google Cloud. I like Dropbox personally, but that's just a personal preference as a small user. We are well underway with our Gemini era, and there's great momentum across the company. Our leadership in AI by generating World War II Germans as minorities, and our global product footprint position us well for the next wave of AI innovation. So let's go ahead and read the information. So revenues compared to last year are up 15% from 69 billion to 80 billion. That's pretty freaking incredible growth. 15% for a large company like this. And remember, Google is 2% of the global investable market cap for stocks. Okay? If you adjust that for currency, it's 16%. Operating income grew 32% year over year, 25%. That's their operating margin. Their operating income grew pretty significantly. Their operating margin was 32%. That's a very powerful, profitable company. Why? Because it's a freaking tech company. Okay. They make lots of profit. Other income, we don't know what that is yet. 2.8. Net income, 23 billion compared to 15 billion in the prior quarter. Wow, that's pretty good. Okay. I thought Google was going to zero. I almost did direct indexing so I could remove Google from BT, but then somebody talked me out of it. Thank God. Okay. Let's look at disaggregated revenues. So we got Google Search and Other grew by about 6 billion year over year. Google Ads, YouTube Ads. Look at that. That's a pretty incredible growth. What's the growth rate on Google or YouTube? So YouTube grew 21% year over year. YouTube ad revenue grew 21%. And that hopefully benefits me, right, Google? Yeah. And then Google Network was basically flat. So overall, they made a pretty significant hefty gain in advertising. Their total advertising revenue growth was 13%. Pretty good, okay? Then they had subscriptions, and their total services grew by roughly the same percentage. Google Cloud, how much did Google Cloud grow by? 9574 to 7454. 28%. Everybody loves cloud. Everybody loves the cloud. Okay, cloud, I guess, is super amazing. It grew by 28%. Other bets, basically everything grew. Everything freaking grew. And they cut their number of employees. So you're growing revenues, you're cutting employees, you're saving on operating expenses, you're going to become more profitable. Okay. As announced on April 18th, we are consolidating teams that focus on building AI models across Google Research and Google DeepMind. And I will say this, I like Google's AI, at least their search AI. I think it's pretty cool. It's actually pretty convenient. And usually it's not accurate all the time, but it's pretty good. You know, like every time I Google search something, it has like the AI thing come up. It's pretty convenient. I like it. They're doing pretty good on that. I'll give them props for that. Operating income. So most of their profit comes from Google services, but they're also making a profit on their Google Cloud. Their Google Cloud profit has massively exploded. That's a massive percentage increase. And then, of course, you know, other bets, they're losing money. This is like R&D for other projects and Alphabet level activities. Alphabet level activities included substantially all the charges related to employee severance and our office space optimization efforts. So this might go away in the future. Okay. Now, here's the big thing that everybody was freaking out about, all the dividend clowns. And I keep crapping on dividends, and you guys just don't listen to me. You just ignore me. Am I sharing my screen? Yes, I am. You guys just ignore me. Alphabet's board of directors today approved the initiation of a cash dividend and declared a cash dividend of 0.2 per share. So if you buy one share of Google, you get your little dividend of 20 cents per share, paid on June 17, 24. Everybody's got a freaking dividend now, okay? To stockholders of record as of June 10th. So make sure you buy the stock before June 10th so you can get your little dividend. The company intends to pay quarterly cash dividends in the future, subject to review and approval by the company's board of directors in the sole discretion. Okay, so theoretically, if the dividend doesn't grow, they're paying 80 cents of dividends per year. Wow, man, that's some crazy passive income. They also authorized repurchases of $70 billion of shares. Wow, okay. Employee severance and related charges. Compensation expenses included employee severance and related charges for the 3 months ended March 31st of $716 million. A $1.3 billion decrease in severance and related charges compared to the 3 months ended March 13, 2023. Wow. They spent a lot of money on severance. Good God. Okay, let's go ahead and look at the financial statements. So let's see how bad Google's balance sheet is. So this is as of March 31st, 2024. So this is roughly a month ago. $24 billion in cash, $83 billion of marketable securities for a total of $108 of cash and cash equivalents. Their total debt, all their liabilities, is $114 billion. So they could almost pay off all their liabilities with the cash and marketable securities on hand. Makes sense. They got accounts receivable. This is money due to them of $44 billion and other current assets, which are not specified, of $12 billion. Their total current assets, this is basically all liquid capital. I mean, you're going to collect your receivables quickly. Marketable securities can be sold very quickly. Cash is cash of $165 billion versus current debts of $76 billion. That's pretty good. Non-marketable securities. I don't know what that is. Are these stunks? Are they invested in stunks? Non-marketable securities. They have $33 billion invested. Deferred income taxes. So this is this is the company basically saying, in the future, we believe we are going to save $11.6 billion on taxes because there were differences between book and tax, and we spent more on taxes now, but that's going to reverse out in the future. So that's basically what that means, is they're saying they think, based on future tax rates, it's kind of a judgment call, that they're going to save $11 billion of taxes. Property, plant, and equipment has gone up. They're buying property, plant, and equipment. Okay. Operating leases. So they own most of their stuff. They don't lease, they own. I mean, they have some operating leases, but it's mostly property, plant, and equipment. Goodwill looks like a little bit of a drop. Could have been like some kind of currency change, but no, it doesn't look like any big acquisitions or any at all. And other non-current assets. So basically, the vast majority of their long-term assets are property, plant, and equipment, which they own instead of leasing. Now, when you have a lease, when you lease something, you have to recognize it on your balance sheet as an asset and a liability. Okay, let's look at current debts. Accounts payable is almost nothing. Accrued compensation is down. Accrued expenses, $48 billion. Accrued revenue share, $8.5 billion. I believe this is payables due to people like me. That's right. Because in December, I earned revenue on doing YouTube, and then I get paid it in January. So what they have to do is they have to accrue the revenue share. They have to say, okay, this is an expense that we incurred in December, but we're gonna pay it in January. That's what I think accrued revenue share is, because obviously they're sharing revenue with creators. And then they have deferred revenue. Deferred revenue is cash you've received up front, but you haven't earned the revenue yet. So just a tiny insignificant amount there. Long-term debt, nothing crazy. Like they basically own like most of their property, plant, and equipment free and clear. Their long-term debt is $13 billion on $143 billion of property, plant, and equipment. They're sitting pretty good with that. Okay. Deferred revenue, non-current, insignificant. Income taxes payable. $9.2 billion. Man, that's a lot of tax. Corporations don't pay tax, bro. And of course, they have operating lease liability. So like I said, when you have leases, you have to record the liability and the asset on your balance sheet. And then other long-term liabilities. So their balance sheet's extremely solid. Extremely solid. They're not going bankrupt. I don't see any like huge red flags on here. But interesting enough, they're doing pretty good with their property, plant, and equipment. Let's see. So it looks like there's a little bit of stock issuance, which is normal, but that's why they buy back. All right, so we already know what their revenues are. Let's see if there's anything crazy that pops up here. No really crazy growth in R&D. Sales and marketing went down a little bit, general and admin. So they increased their R&D a tad bit, and they cut some costs in sales and general and admin. Okay, that's basically laying people off. Let's see. Yep, nothing really crazy on the income statement. Statement of cash flows. So their cash from operations went from $23 billion in one quarter to $28 billion. Okay. Let's see if there's anything crazy on here. Depreciation. No, nothing really crazy on here. Okay, so they grew their operating cash flow. They actually doubled their purchases of property, plant, and equipment. So out of the $28 billion of positive operating cash flow, they piled $12 billion into property, plant, and equipment, and then another $20 billion into purchases of marketable securities. And of course, then $24 billion matured. So they had a net maturity of marketable securities. Let's see. What do they do? Net payments related to stock-based award activity. So $2.9 billion of outflows for stock-based awards. That could be like taxes or something like that. Repurchases of stock. They spent $15 billion in one quarter buying back stock. And they paid about $3 billion of debt, but they don't really have a lot of debt. So overall, I mean, really nothing bad. They're paying a dividend now. They got $70 billion of buybacks. They can probably easily execute that. Insanely good balance sheet. Massive profit growth. Solid. Especially the YouTube part. That makes me happy. All right, let's do some comments. 20% share. And of course, everybody on Twitter now wants to buy Google. All the dividend clowns. Do you see why dividend investing is clownish? Okay. If you don't see it by now, I don't know what to tell you. My frugal. I'm long as balls. Me too. It's 2% of my portfolio, bro. Yeah, the general. I really do like that. I got nothing bad to say about it. Small's buy price on Google changed again. So predictable. Price go up, good company. Price go down is trash, bro. What's his buy price now? What do you think about CRE and regional banks? Do you plan to increase the investment amount if a VT drops significantly? No, I don't. I invest what I can. I'm not going to increase it because I invest what I can. There's no increasing the amount I buy. I'm going to make a video about buying the dip, which is a stupid concept if you're an index fund investor. Google my Dougal. Private equities, bro. Yeah, makes sense. They own SpaceX for like 10%, stuff like that. Yeah, I mean, it sounds like they had investments in like private equity, stock, whatever. Greetings and salutation. That juicy net income. Wow, Google's very profitable. Shocking. Oh my God. Extremely high quality company trading at 21 forward earnings. Go look at what Tesla's trading at. It's like a joke. I don't understand. Let's see. The stock should have gone up. It's the market, bro. The market does what the market does. Would you consider buying Vanguard if they went public? Yeah, market cap weights. It's still undervalued, especially compared to other. I just thought it was hilarious that like the stock barely dropped. People lost their mind. They went crazy. It's over, bro. And then they had good earnings and they came right back. Google firing act. Yeah, I heard about that. I'm actually surprised they did that. What I thought they would have just given them all raises or something. Tattooed chef. Yeah, Jeremy, he freaking fled to large cap tech after all his clown stocks went to zero. And now he's a genius like every other QQQ buyer. It was up 10%, I think. It would have been less enough for the dividend, bringing in different cohort of investors. Isn't it funny? It's just hilarious that now that they're paying a dividend, now they want to buy Google. Like they are so predictable with what they do. Dividend good. No dividend bad. Google's already a little under 2% of it. Yeah, it is. Oh my God. So people, they don't understand. I don't think they really conceptualize that you owned these companies. Like they just see the ticker VT and that's it. But in reality, you own underlying companies in the ETF. And Google is literally 2% of my wealth. That's multiple thousands of dollars I have in Google stock. I have how many shares do I probably have? Let's see. How many shares of Google do I have, boys? Oops. Oh, I screwed that up. 73. I have like 50 shares of Google. Did I do that right? Divided by times 0.2. Yeah, I have like 50 shares of Google. What? Huh? Yeah, that's right. Why? You're an index investor. Why are you looking at Google stock? It's going to 200, probably. Strongly. You know what happened to Jay Nagy? It's been weeks. He's fine. He'll be back. He just had some family stuff to attend to. Bonds have a juicy yield, probably better than stocks, right? I fervently disagree. A month ago, everybody wanted Sundar replaced. It's just clownery. Hi from France. Are there some news about the seven-figure genius investment in Walgreens? Well, if the stock goes down a lot, he just ignores it. And then everybody loves him and subscribes to his channel. If you still believe Elon, you're a clown. Well, there's a lot of clowns out there. That was pretty cool. Should Google not be valued $3 trillion? They make more cash and grow faster now. That's up to the market to decide, bro. Nice to see you upgrade your studio to the bedroom. I know, it's nice not to be in that crappy garage. My health has improved, too. People don't get it. That's why people buy Yield Max, for example. Yeah, that's why I constantly attack dividends. Constantly. People get mad at me. Like, you don't understand, bro. Yeah, I do. You people just buy stuff because it has a dividend. That's it. You look at the yield. If it's a high yield, you think it's good. That is literally all you clowns are doing. No, we don't. Bonds have a better yield and worse return. Well, and pretty soon bonds won't have a better yield. Let's see. Well, I think that's it. Pretty impressive company. I'm glad I have 50 shares of Google, roughly. And let's see. Why do companies choose to pay a dividend? Well, I mean, like they have cash sitting there. What are they going to do with it? I mean, they could basically when you have cash, you can let it sit there and make interest. That's a pretty low return. You can invest the cash in projects, and hopefully those projects could bear fruit. But if you don't have any projects to invest the cash in, maybe you just give it back to the shareholders because you got nothing else to do with it. That's why companies pay dividends sometimes. Let's see. Thanks for the vid. I know you don't love big tech like I do, but thanks for covering them. Well, I don't hate big tech. What I hate is when people massively overweight it in their portfolios because it went up a lot. Big tech is the top holdings in VT. You need to understand this, people. Forced profit taking. Screw college, you're still around. Like I said, that's for the market to decide. All right, guys, have a wonderful day. Cheers.